Corn and soybeans falling to start the week, but the dairy complex has also seen some price changes over the past few weeks. Ag Day's Michelle Rook joins us with more on that.
Joining us with market analysis, John Heinberg with Total Farm Marketing. John, milk market has had a setback off of its highs, and let's talk about why. A lot of that's demand recessionary concerns.
Yeah, the big concerns going on in that cheese market right now. We've seen those block and barrel prices just continue to tumble since those highs. And, that's a little bit tied to the consumer demand, some of the recession fears that are there. You're watching some of the government reports are basically saying that the demand side of it is just not outpacing the supply, and that's what's driving prices lower. Milk markets have been trying to hold the $20 handle after being consolidating between 25 and 23 basically most of the spring. So then the technical side also came into play there too. When we broke that trading range, the sellers kind of took over in the marketplace, and that's been driving us lower. So we'll have to see if things can kind of hold in this window. But with cheese prices trading around that $1.80 handle, it just has me a little more concerned that there may be some more potential downside there unless we see something dramatically change on the demand side of the story.
Yeah, production has actually pulled back a bit here. So that's at least offsetting a little bit of that. But what's your best projections as we go forward, as you work with producers about, how much lower we could go?
Again, we've seen that production pull back, especially with the forecast for the hotter temperatures and things coming through, putting some stress on the animals. So we'll have to see how that comes into play. But, producers are still looking at a $20 price window, or at least somewhere in that range. And that's still at least an area that can work. A little tougher, obviously, with the price of the inputs where they are. But you got to still protect value when you have it here. So, again, make sure you're kind of protecting some of those key psychological levels. And $20 is one of those levels. So if you have that opportunity to do that, you probably should, and make sure but stay flexible so you can keep that top side open in case we do see some recovery. But at least right now, because of just the lack of liquidity, pushes that market to a little bit more on the vulnerable side to further breaks.
Okay, some great advice. Thanks so much for joining us, John Heinberg with Total Farm Marketing.
To discuss marketing strategies, call 800-334-9779.